Hi, I want to welcome everybody back today for another exciting Q&A with the managers of an EB-5 project. My name is Michael Gibson. I'm the Managing Director with US Advisors. We're a registered investment advisory firm. We specialize in performing due diligence and risk analysis on EB-5 projects for investors and their attorneys and advisors. So the reason we do these shows is to allow investors to communicate directly with the managers, with the issuers of the offerings, to ask them any questions that they have regarding either their regional centers, their investments, or anything related to the operation of the asset. I want to make sure, and this is a securities disclaimer, these are not sales solicitations. We are not recommending the projects. We're simply providing this forum as a way for you to be able to ask the managers questions directly. If you are interested in subscribing or receiving the offering documents, we recommend that you contact the managers directly. Their information is posted on the portal. Without any further ado, I'm going to introduce Frank Mannheim, who is the director, one of the principals of DVRC, to talk a little bit about his project and the DVRC. So Frank, welcome to the show today.
Hi there, Mike. How are you?
I'm doing great. Well, listen, I know a lot of our viewers they know about DVRC. You've been in the market for a while. You're relatively new to the team. Could you talk a little bit about who you are, what brought you to the team, and what is DVRC?
Sure, I'd be happy to. My name is Frank Mannheim. I'm the brother of the founder and CEO of the DVRC, Joseph Mannheim. I'm a director and I'm a member of the board of directors of the DVRC. My background is in investment banking. I worked for 13 years as a corporate financier in New York and in London. The DVRC is a regional center that was established first in 2012, and then as it came out with its first fund, which was PTC1, that was raised and completed in 2015. The DVRC is a unique regional center, which is the only 100% government infrastructure fund. That means that we only work with government infrastructure entities. And we have three funds. The first fund is PTC1. That's a closed fund, $200 million. The second fund is SEPTA2. That's $300 million. That's getting close to closed. And then there's the third fund, which I'm talking to you today about, which is PTC2, and that's an $800 million fund. All of the borrowers in those funds, in every fund, are government municipal entities. They are either the Pennsylvania Turnpike Commission or the Southeastern Pennsylvania Transportation Association.
Fantastic. Okay, so that's a great introduction as to who you are. I understand today from our producer we have a video describing DVRC. I'd like to ask Joe, our producer in New York, to go ahead and tee that up.
One day, Pennsylvania businesses access 6 of the 10 largest American markets and 60% of the US and Canada's population. The second largest energy field in the world fuels a natural gas industry that's made Pennsylvania the second largest producer in the US, with a reserve that's poised to revolutionize business. In one day, you'll have access to a highly skilled workforce of 6.4 million. In 1 month, you'll start to see opportunities only Pennsylvania can offer. And in 1 year, you'll realize that doing business in Pennsylvania was one of the best decisions you ever made.
Simply put, Pennsylvania is built to advance. Pennsylvanians are synonymous with independence, creativity, and a fiercely competitive can-do spirit. We're leading the new wave of technological and scientific transformation. And we're proud to create an economic environment of lower taxes, streamlined permitting, and strong investments in education, our workers, and our infrastructure. We encourage innovation and reward risk takers. So when you're ready to be at the center of it all, we welcome you to Pennsylvania, where the future of business is already here. Pennsylvania, built to advance.
Marked the beginning of the nation's first superhighway, the Pennsylvania Turnpike.
The road ahead curves, gliding smoothly through mountains, across valleys, over bridges. Leading to destinations, memories, work trips, day trips, weekend getaways, Sunday drives, Friday rambles. Solid, reliable, convenient. Cars, buses, trucks, all are welcome. Seasons change, bringing weather and wonder. Daytime turns to night, then back again. Fresh air blows Pennsylvania breezes. Travelers rest and refresh. The pavement is firm, steering toward the journey's end.
Is that where you're going?
Yes, what's that?
Oh, that's the entrance to the Pennsylvania Turnpike. Haven't you ever been over it?
Easy on, easy travel, easy off. Sunset, twilight, or dawn. You're never alone on the Turnpike.
To ensure the safety of our children, to ensure the safety of our motorists, and support the economy of Pennsylvania.
Driving forward, technology enlightens. A past of pride, a presence of vision, a future of innovation. Leading, moving, merging, evolving.
These will be the first phase, if you will, in the Commonwealth of moving our interstate system to 70 miles an hour.
Adapting.
What are we going to do when we hit the real mountains?
Well, you'll see any minute now.
We tunnel right through.
Right.
This is a dream highway.
Fueling progress. Branching outward. Moving forward.
From going to 4 lanes to 6 lanes in this section of roadway.
This is the Pennsylvania Turnpike.
75 years.
Capital investments in our roadways. I'm Jill Horner. This is Comcast Newsmakers. With me is Mark Compton. He's CEO of the Pennsylvania Turnpike Commission. Thanks so much for being with us.
Thanks for having me.
Let's talk about some of the things that we will start to see in place here in the Commonwealth. Act 89 was signed into law. This is related to transportation spending, transportation funding through the state. What does it mean for the Turnpike?
It is. And Act 89 was a great piece of legislation for the Commonwealth. And when it's fully realized, about $2.4 billion a year will be made into our transportation investments. How that relates to the Pennsylvania Turnpike specifically is really in 2 ways. One, it allows us to continue to invest in our current infrastructure. And some of the parts of our road are over 70 years old, so that's a much needed. And secondly, allows us to consider and to do new capacity and in some components, in some places, new roadways.
Changes are coming to the PA Turnpike. A $94 million project will add 2 lanes, making a 6-lane road between the Susquehanna River Bridge and Harrisburg West interchange. Construction, I should say, will start after Memorial Day and be completed by 2018.
That eventually the result of that work is going to be safer roads for motorists getting around the community, convenience and quality of life for people, and increased mobility, and of course jobs.
PennDOT says $1.7 billion has been invested in the Turnpike.
But for the next 50 years, this new bridge is going to help northeastern Pennsylvania compete for better jobs. And that $100 million I think it has to continually be said how important it is that we make these transportation investments, as Senator Argel had mentioned, how important it is to our economy, the jobs that they create, not only in the construction phase of the project, but the long-term viability of our state to be competitive with the rest of the country and the rest of the world.
Everybody's ready?
Well, you now need a little extra money to take the Pennsylvania Turnpike. A toll hike went into effect at midnight. Tolls rose 6% for both Easy Pass and cash customers. The money will help pay loans used to fund road work. The commission expects to impose annual fare increases of 3 to 6% until 2044. Another change, drivers heading to the Pennsylvania Turnpike from New Jersey will no longer have to stop to pay a toll at the bridge. A camera will snap a picture of each license plate and mail a bill to the driver.
Hi, and welcome back to our Q&A today with Frank Mannheim. Just again, to introduce myself, I'm Michael Gibson, the Managing Director with U.S. Advisors, and we're doing the Q&A with Frank Mannheim with the DVRC, talking about all of their projects. It's a Q&A show. We invite any listeners who are tuned in to call the number that you see listed below and ask Frank any questions that you have regarding either this project or any past projects. So Frank's information, again, is listed on the portal, EB-5 Projects.com. Frank, you gave us a very nice introduction. That was a great video. I want to come back to the actual project discussion. So we're here talking about Pennsylvania Turnpike Highway Capital. Can you give us an overview of what you're trying to accomplish with this project?
Sure, Mike, I'd love to. So Pennsylvania Turnpike 2 is an $800 million fund. We have so far raised somewhere on the order of nearly $80 million. The fund itself is to go to improving the Pennsylvania Turnpike Highway. It's part of their capital budget. And by improvements, we mean two things. There's the widening of the highway to take it from 4 lanes to 6 lanes. And there's an improvement in the road quality, so the road surfaces. The project itself is a $1.7 billion capital project. It is fully funded by the PTC. So the PTC it doesn't need the EB-5 capital. So if we weren't able to raise the money, then they would go ahead with the capital project anyway. So the project, there's no project risk associated with the need for EB-5. I'm not sure I can go into a bit more detail. As I said, it's an $800 million project. It's a highway improvement. It's a $1.7 billion total project. It's currently, this is a good point for your listeners. Of the project spend currently, $560 million has already been spent. That equates to 7,500 approximately jobs available for investors. So we have enough jobs for 750 investors, and we only have 160 investors in the project.
Okay, so lots of margin. Frank, as I understand from our producer, Joe, we have a caller on the line. Caller, could you ask your question, please?
Yes. Could you tell me what the return of investment this project will give me? And when can I take the investment back?
Okay, so we were talking offline earlier this morning about repayment of the principal, and you had some comments that you wanted to share with our audience on how they can get their money back once they're invested.
Okay, that's would happy to, Mike. The investors are eligible for a return of their capital from the limited partnership after 5 years and the successful adjudication of their I-829.
Okay. Did that answer your question, caller?
Yes, I also asked about the return of investment. What is the return that I get on this project?
Okay, thank you. And caller, thank you very much for your questions. Frank, the ROI, what are we looking at here?
You're looking at an annual return of about 0.25%. One thing to understand for your listeners is that we finance infrastructure projects that are for the U.S. government entities. Our competition is not bank financing, but it's rather what we call the muni market in the United States. So we have to beat very low cost financing here in the United States, which means that the loans that we make are quite low to begin with. And compared to some other EB-5s, you won't get as much of a return. But we are looking to provide low cost capital to the government, and hence the returns are lower. But in exchange for that, you get the security of high quality collateral and a credit rating of A to AA, which is what a government credit rating is. So the return is 0.25% a year in terms of the return to the investor. And the benefit to the investor is that they get the collateral and the credit rating of the U.S. government.
Great. Caller, is that helpful?
Yes, yes. Thank you so much.
All right, thank you. So, and just staying on the theme of the repayment, how is that repaid? As you mentioned, it's after the 5 years and the approval of the 829. Is there a way that they would apply to get repaid? How would they do that? What is the process internally to determine how to repay and in what form?
So, Mike, that's a really good question. One of the unique things about the DVRC is that we have a structure which is different from other regional centers. Let me back up a second. The infrastructure borrowers, the U.S. government entities, need long-term capital. 5-year loans don't really work when you're trying to build a highway or if you're building a subway system. So they look for a long-term funding solution, most generally. In order to achieve that, what we structured, and this was my brother, structured was that at the 5-year mark, the maturity of the EB-5 loan, the borrower, in this fund's case, the Pennsylvania Turnpike Commission, has the option to repay their investors, the EB-5 investors, with either cash or bonds. If it is bonds, they will deliver bonds and new issue bonds to the investors that are bonds in the Pennsylvania Turnpike. And these have the same qualities as all the bonds that the Pennsylvania Turnpike has ever issued and are a senior in the same manner as senior bonds that the Pennsylvania Turnpike issues. So to answer your question, Mike, how would an investor get their money back? Well, if they're eligible for a return of capital, they would be receiving once they were eligible and the system had been established, they would receive either cash or bonds from the limited partnership.
Okay, great. And Frank, that's a great explanation. I understand we have another caller online. Caller, welcome to the show. What's your question for Frank?
Yes, so my question for Frank is that since this is an investment in a government bond, is the return on principal guaranteed? And if I call from India, so if my country is so bad, so how will you redeploy my capital?
Okay, so
Mike, I heard the first part, but I didn't hear the second part.
Okay, yeah. So the first question was, I'm sorry, caller. Go ahead and ask again, please.
Yeah, so is the principal guaranteed, because since this is a government bond, and in case the India quota gets retrograde, how will you, when will I get my money back, and how will you redeploy my investment?
Okay, I got it. So, Mike, if you don't mind if I jump in?
Jump in. This is you. This is all you.
So, caller, thank you very much. Two very good questions. To answer your first question, there are no guarantees. We cannot guarantee you. And if any EB-5 firm is guaranteeing anything, then that's a red flag, because you can't have a guarantee and be at risk from the USCIS's perspective. So if you see regional centers saying guarantee, or you see that word, that to me is a red flag, and I would be concerned. Now, is there greater security because it's a government New York as well that we have done, and look at it yourself? There are credit rating agencies called Moody's, Standard & Poor's, and Fitch, which are independent financial firms which analyze the risk associated with the bonds issued by these entities. And you can read those reports. They're out there on the web to read. If you contact us and we are engaged in a discussion, we'd happily share those with you. And that will show you that the credit rating for these government entities, for Pennsylvania Turnpike, is A to AA. I would wager that the credit rating for the Pennsylvania Turnpike is probably higher or equal to the credit ratings of the leading banks in India. Basically, it's one of the best credit ratings you can get, near the top. Now, is that a guarantee? Absolutely not. There is no guarantee in EB-5. You cannot have a guarantee because you have to be at risk. Is there security that's provided because of the high quality of the issuer? Yes, I think that there's some security, but it is not a guarantee. So there is no guarantee. To your second point, in the case of retrogression with India, I am not an immigration attorney, so I can't really answer this, but effectively, how we structured it was twofold. One, if India retrogresses and goes into retrogression, and the Indian investor is still waiting for their IA-29, the Pennsylvania Turnpike has written a letter already to us saying that they are willing to extend the loan in order to satisfy the requirements of the IA-29 and the capital to be at risk. In addition, and most importantly, in the case where the Pennsylvania Turnpike decides to issue bonds as a repayment, the USCIS has explicitly stated, and you can find it on the website, that a newly issued bond in an infrastructure and government entity qualifies for at-risk capital. So really, there is no concern with regards to the impact of retrogression on the fund insofar as the risk quality of the component of your EB-5 application. Does that make sense?
Yeah. So here's how I understand it. And I worked as well with Citi for a number of years in the fixed income market. So I understand, but for our viewers who may not be as familiar with the difference, as I understand it, they're looking at a number of choices. If they're looking and trying to ask the question, which projects have the highest probability of repayment of principal at term, then as I understand what you're saying is that if they invest in, say, a single entity project, it could be a hotel or any other hard asset, they would be looking to the developers to be able to repay them. Whereas in your case, you're looking to a well-established government agency with a long track record, no guarantee. They could go out, the Pennsylvania Turnpike Commission could go and just decide not to issue any more bonds or default on the bonds that they've issued. There's no guarantee. But you're saying to investors that if they're looking at different options, a single entity investment, a developer may not have sufficient resources to repay, whereas your feeling is the government entity would be in a better position. Is that correct?
I think that's right. I mean, the way that I would phrase it, Michael, in addition to what you said, is that if you look at the history of failure in the government entity space and the history of failure in the private space, based on that history, the probability, the chance of the Pennsylvania Turnpike failing and not repaying is less than 1%. Whereas if you look at in the private space, the chances of failure are much higher, potentially, much higher. But this is not a guarantee. We can't guarantee. So I just want to reissue that. But based on historical data, the Pennsylvania Turnpike has a less than 1%, less than 0.5% chance of defaulting on its loans. And that includes the EB-5 loans.
Right. And we've seen that in the muni market, that the rate of default across the board, across the nation, is very low. There is the risk. I mean, municipalities have defaulted in the past. So there, as you mentioned, there is that risk of default, but it's extremely low. Would you say it's fair to say that there's a bit of a trade-off, that the investors who are choosing this option of the higher investment quality to get are in return getting perhaps a lower ROI? Would you say that's a fair trade-off?
I think that is a fair trade-off, and that's actually the logical trade-off, because the way it works is that for higher risk, you should get higher return. For lower risk, you get lower return. That's how it works in the business world. And one of the problems that my brother, the founder of DVRC, saw was that relationship was all screwed up in EB-5. People were taking significant amounts of risk and not getting a commensurate return. So one of the benefits of the DVRC is that we have a very low risk project, very low risk, possibly the lowest you could get out there. But I mean, I can't guarantee anything. It just looks like it from what I see here. Very low risk. And as a result, you have a low return. However, when you look at other projects, very high risk, not so high a return. So that's why we think that the DVRC has a benefit, because it actually addresses the relationship between low risk and low return that should be addressed with EB-5 investments.
Great. I know another common question that we get from our viewers is the track record. DVRC has been around for a while. For the viewers who may not be familiar with what you've done in the past, as well as what the immigration successes have been, or the track record, can you give us just a brief history of 526s, 829s, where you are in terms of processing and approvals?
Sure. So with our first fund, which, remember, we're a relatively new regional center. We raised our first fund in 2015 in less than 12 months, and then that capital was deployed in the beginning of 16. Out of the 400 investors that we have in the first fund, 375 have received their I-526 approvals. So we're down to the short strokes. And indeed, the first two I-829 applications are going in. The first one has been submitted, and I believe the second one is going to be submitted in just a few months. So we're well on our way with the first fund. With regards to our other funds, in terms of I-829 processing, I-526 processing, we're on an average of about 13 months in terms of processing time. We've had one I-526 approval for the PTC2 project. We believe that took only 5 months, but we really don't use that as a benchmark, because that's really has to do with the fact that we think the USCIS is divided into a project team, and then you have your individual application team. And in order for a project to be approved, you need to have one I-526 approval associated with that project. So you usually get an I-526 approved with the project pretty swiftly. But we're confident that we're going to see I-526 approvals coming in for PTC2 shortly. Remember, the average processing time listed by the USCIS is 22 or 23 months, I believe.
Right. Okay, that's a great. And by the way, for the viewers who are watching, if you're in front of your computer on the EB-5 Projects.com portal, if you do search for the DVRC, Delaware Valley Regional Center, you can go to the projects page, and then you can go ahead and see past projects, and you can look and see what they've done in the past. I know we've done several site visits to see the development, and I mean, it's huge. I mean, there's no question about it. When you talk about infrastructure projects, I think this is definitely a poster for that, because I mean, the highway is just full of trucks. The yellow Caterpillars running around digging dirt and doing the expansions and everything else. So all of their projects are listed on the portal. Frank, we want to keep this down to about 30 minutes. We promised everybody to keep it short and sweet. Any final closing thoughts for our viewers who are watching?
Just thank everybody for listening, first and foremost, and thank you, Michael, for hosting this. You're doing a great service for the EB-5 industry. I just want everybody to know that the DVRC understands that this is a complicated and important decision. It's not just an investment decision, it's an immigration decision, and there are a lot of factors that go into it. And we encourage everybody to be very thorough in examining all of the documents that they receive from all their regional centers. And we are happy to speak with any investor who is looking to get more information on the PTC2 project. And we hope that everybody's learned something a little bit more about the DVRC from this call.
Frank, I thank you so much for coming on the show today. I do want to remind our audience, we have verified the project. We have that report for free Again, if you're interested in viewing the report, please just contact us. We're happy to share that with you. It is free for registered investors and their attorneys, advisors. Also, we'll be up there in a few weeks doing our annual site visit, and we'll be meeting with Frank and Joe and doing a tour of the highway to see what the progress has been since our last site visit. So I recommend everybody to contact Frank and his team. All of the information is listed on the portal. If you have any questions, please let us know at EB-5 or support at EB-5 Projects. With that, my name is Michael Gibson. I'm going to sign off for today. I want to thank our executive producer in New York, Joe Mahoney with NeuralNet, and obviously Frank Mannheim for taking time from his vacation to be with us today and answer your questions. We do have a show tomorrow, our last of the Q&A for this series, and I wish everybody to come back. Happy Thursday to everybody, and thank you for joining us today. Bye.
Hi, meet Juan and Julia. They're hopelessly struggling to select a secure investment project for the EB-5 visa application, but it seems impossible. Hundreds are offered. Many make unsupported promises, charge high fees, offer low returns, and are backed by commission-hungry agents and unscrupulous promoters, with no details on their past experience, qualifications, or oversight, making Juan and Julia fear the financial risk of loss and possible green card denial. What they need is reliable, independent, and accurate information verified by registered investment advisors and EB-5 investment professionals. Luckily, that's all possible with EB-5 Juan and Julia confidently registered for free and gained access to independent research, analysis, background checks on EB-5 projects and managers that are compliant with USCIS policy, U.S. securities laws, no agent fees, and direct communication with project managers. Juan and Julia were able to make an educated decision while saving time and thousands of dollars. Visit EB-5Projects.com today for free access to verified, no-commission EB-5 investments. Contact us at support@EB-5Projects.com or call 1-305-912-3245.